Hey guys, so quickly we're just going to go over Fibonacci just to clear some things up because some of you don't exactly know where to place the fibs or you don't know how wide your stop loss should be at a certain level. So we're just going to go over that quickly. So what we're going to do is I'm just going to show you a description. Okay, so in this example, the market is in a downtrend, so we want to place the fib from the high to the low to get that retracement. So we go from the top to the bottom. Okay, and let's just adjust this to say price went to the 61.8 fib. Okay, so price is in a downtrend. We got the high and we got the low, and now we're waiting for price to pull back, and we want this retracement. So this is where our entry is going to be. So the most common ones are the 61.8, 50, and 38.2. The best one I honestly think is the 61.8 because we usually see a massive drop after that. So what we want to do is take our short position tool and we want to calculate our risk to reward. So on this it says 131,675. So we're going to go into here and edit it. So we're going to go 131,675. And then our take profit will be at the negative 27% fib and the negative 61.8. So our first target will be around 131,108. We'll just put 100. So what we want to do is put our stop loss just above the 78.6. So we're just going to go like this. So about a 20 to 30 pip stop loss because sometimes price can go up to the 78.6, like wick at it and then drop. So we want to make our stop loss about 20 to 30 pips above that. And if the market actually ends up closing above the 78.6, that's when you know the market is not going to continue down or up depending on the direction. So in this example, it hit 61.8. And the market goes to the negative 61.8. So the first target is the negative 27, second target 61.8. So in this situation, we hit the 61.8, came up, tested this negative 27%, and then started to continue up. So what we can do to confirm this is we can add a trend line for multiple confirmation. Okay, so I mean, so necessary, like basically we'll just go like this. Okay, so hit the 61.8, so we have a trend line. The trend line here, so we have 1, 2, 3. So we can anticipate that the market is going to continue down. So we don't want to just rely on fibs. We want to add multiple confluences. So candlestick patterns, trend lines, support and resistance, all that kind of stuff. So never rely on one confirmation. So a lot of people actually, well, some people, let me just delete this. Some people actually go from the body, but I go from the wick just because the wick shows like where price has been, and then the body shows where price closes. So we want to make sure that like this is price came up to 1.35, right? So this is important because at the body it was at 1.33. So that difference pip-wise is about 180 pips. So that's a lot. So we want to make sure we draw the fib from the high to the low. Okay, so in this example right here, price pushed down. We're waiting for that pullback to get our entry. This is on the daily time frame, so we can break it down, but this is just an example. So price pushed down, made a pullback, and then now is continuing down. Okay, so this is actually live. This is right now, so I will send this chart out, but we want to always make sure that we're attaching the fib to the wicks, not the bodies. So now what I'm going to do is I'm going to show you how we can catch both trades by combining. So you always want to look at the longer time frames because it shows the bigger picture. And if you're drawing fibs on the daily, it's just a stronger trend. So it's a stronger confluence. So it's good to do that. So let's say we have our trend line, and then okay. So we're drawing our fib from this high to this low. Okay, so in this situation, again, it's at the 61.8, we're at the trend line. So what we can do is we can actually combine fibs to take that upwards move. So instead of waiting, like, especially if you're on the higher time frames, like 4-hour daily, instead of waiting for that drop, so we're in a downturn right now, but we are retracing, we can catch this retrace as well as waiting for that position to continue short, to continue that trend. So what we do is, this is in a downtrend, so we draw our fibs from 100%, put the 0% here, and then what we can do is take another set of fibs and then go from the low to the high. Okay, so as you can see in this situation right here, price is at 61.8, and then from right here, price going in an uptrend, price rejected off between the 61.8 and 78.6, so it goes up to the trend line. Now we can see that that uptrend move is at the negative 61.8. That's where we would take profit. And then following our trend in the downtrend, we can see that it is at the 61.8. So as you can see, they both match up. So this is a good indication that, okay, price is going to drop. Okay, so let me show you another example. So always, like I said, always look out for multiple confluences. Don't just rely on fibs. Okay. So let's say we have support and resistance. And make sure you change your colors for everything, because just so you don't get confused. Okay, so let's say we have resistance right here, support right here. So price is coming up, huge impulse up. Then we have price kind of moving in this range. Okay, and then price breaks out of this range. So what we're going to do is we're going to draw fibs. So we're going to go, since this is an uptrend, we're going to take the fibs from the low to the high. Okay, so now, I hate when that does that. So now we're waiting for our retracement right here, okay? So since the fibs are on the 38.2%, we're expecting a retrace because price broke out of resistance right here. So we always want, sorry, a retest. We always want a retest to come back down just so that price doesn't, for example, break out and then come back below that resistance. We want to make sure it tests this broken resistance and continues up to one of our targets, either the 27 or the 61.8. So in this example, price came back down, tested resistance, respected it. So now that becomes support, and then we also have a confluence that it touched our 38.2% fib and continued up. So that's an example. So what we want to do in this example is draw resistance and support, wait for a breakout of consolidation and a retest, add Fibonacci, watch for our entry, and choose our targets. Okay, so it's pretty simple. Like, you guys just have to keep practicing and you'll understand this eventually. So let's do another example. So we have resistance, And we have support. Okay, so same scenario except price goes below. So 1, 2. Okay, so what we want to do is draw our fibs from the high to the low. Okay, so what we're doing is price broke through support, now acting as resistance, and we want to make sure we get that retest in order to see if we can continue down. So our retest is at the 38.2%, and then what we're doing is if we get that confirmation, we are looking for our targets around -27% and -61.8. Sometimes, like let's say you take a couple entries on the 38.2, like a couple sell entries, sometimes I do advise you guys to take some of the profits at the 0% because this is what can happen in some cases. So price could test the 38.2, go down, double bottom at the 0% and fly up. Okay, so in some cases it can do that. So if you feel comfortable taking some profits at the 0%, you can. It all depends on the setup and the trend and how strong it is. So that's something you can look out for. So looking for a head and shoulder pattern. Head and shoulder patterns are best on higher time frames because it's stronger. It's a stronger move. So okay, so we're going to draw head and shoulder pattern. Okay, so what we want to do is take our fibs from the low to the high. Oops. Okay, so let's say price goes to our -27% fib, okay? So it stops at there and then price continues down. So what we want to do is we kind of want to measure how many pips this is. So 0% to right here where the last low was is about 152 pips, okay? So as you can see, it's kind of making a head and shoulders pattern. So what we want to do is and it's chilling around the 61.8 and the 78.6. So we're expecting price to go up, okay? So we want that right shoulder to form if this is going to be a complete head and shoulder pattern, obviously. So let's just say price does respect the 61.8 again, respects this low, and continues up. So since we measured it from the 0% right down to this low, it was about 153 pips, we can expect that the movement up is going to be the same. So in this example it is, so price goes up, touches the 0%, makes a head and shoulder pattern. Obviously this isn't the best head and shoulder pattern, but just getting to the point. So it touches the 0%. That movement, like we said previously, was about 153 pips, and that's how we can expect the next move. So now we can label it as a head and shoulder pattern. And now we can look to take an entry on this right shoulder. So then what we want to do is we want to add the bearish fibs. So we go from the high to the low. Get rid of this. When it does that, get rid of this. And then we can see that the price is at the 78.6 and that we are expecting a drop to one of our targets. Okay? So that is how we do it for the head and shoulder pattern. Another good example is basically here, I'll show you. Let's just say we are breaking this level I'll do the horizontal line. So let's just say price comes down to there. I'm just going to make it a different color. So let's say price comes down to here, and we end up breaking this, okay? So sometimes, again, sometimes price will respect the 0%. Right now, it's making a triple bottom pattern. So what that means is price could respect this support and then continue up, okay? So let's say in this scenario that price breaks to this negative 27%, and then it goes up to the 0% and then continues down. So this is what could happen, right? So this is why, again, multiple confluences are good, because you're also looking at a support zone. It's breaking the support, touching our target of negative 27%. Then it's retesting this level to see if it can go further to our next target. So this is important as well. Okay. So let's just look at a couple real examples on the chart. Okay, so looking at, let's just see here. So price is in a downtrend right now. Price respects this support, and price continues up. So we want to draw our fibs to find out where our entry is going to be to continue. So we draw it from the bottom to the high, so low, high, and then this is our retracement leg. So it's kind of like A, B, C, boom. So it rejected off the 61.8 here. So what we could do, so before price actually made, so this is a bullish engulfing pattern. So before price actually made this move, it tried to go lower than this, but it failed to. So what we can do is take our long position and go, so 61.8, 21973. True. And then our target would be negative 27% and negative 61. But again, we have to see how price reacts. So then our stop loss would be just below the 78.6 in this situation. So our entry was 61.8. We put our stop loss below just in case it starts to wick below, and then this is our move. Okay, so fibs are really, really good. You can catch really big moves. I just want to show you exactly what I mean by breaking it down. So the daily, we drew it from the low to the high, dropping down on the 4-hour. We can see exactly how price is reacting on these levels. So it failed to break this support right here. So again, this would be our entry off the 61.8. Double tops are a really good confirmation. So we have our resistance right here. Price goes up, makes an impulse, goes down, pull back, comes right back up, tests this resistance, fails, and shoots down. Massive impulse. Then it does it again and again. Okay? So the market is always, always repeating itself. So this is when you can add another confirmation. We have a trend line right here. Okay? So this is things you can do. So for example, let's draw our fibs. High to low. So we have our 100%. We failed to close above the 78.6, rejected, shot down. went to close to our negative 61.8 target, came back up, tested this trend line, it's around the 61.8. See how in a lot of examples I just showed you, it's always rejecting off that 61.8. Okay, so right here, we have an inverse head and shoulder pattern. We want to take our fibs from the low to the high. In this situation, it's respected the 50% and continued up. Okay. So again, guys, this takes a bit, but once you start practicing over and over again, like take like a day, take a week to practice support and resistance, take a week to practice Fibonacci, take a week to find trend lines and know how to use them, you know, like it's not a rush. The biggest thing is you don't want to focus on the money like I said earlier. You want to focus on the setup and learning the skill. Okay, so if you guys have any questions, let me know and I am going to post charts right away.